Let's talk about something most people avoid until the last minute: taxes. Spending a little time on your taxes now, mid-year, can save you thousands and a huge headache next spring. A mid-year tax checkup puts you in control. No need to be a tax expert, just make a few smart tweaks. Think of it like a car checkup. A little maintenance now prevents a breakdown later. We'll walk through a simple checklist so you can avoid surprises and maybe even look forward to a refund. Let's dive in. Why should you even think about taxes right now? It's probably the last thing on your mind, right? Well, because being proactive and getting ahead of the game always beats scrambling in April. Trust me, nobody enjoys that last-minute tax frenzy. The truth is, your tax bill isn't some random number that appears out of nowhere. It's actually shaped by every single financial move you make throughout the entire year. From raises and bonuses at your main job, to those exciting side hustles you're pursuing, to your investments, and even major life changes that come your way. So a mid-year tax checkup gives you valuable time to adjust your strategy, fix any potential issues that might be brewing, and proactively use tax-saving strategies that are available to you. All before it's simply too late to make a difference. Take the time to find out now if you're on track to owe money or if you're in line for a refund. It's better to know. Don't wait until April rolls around to discover a nasty, unwelcome surprise. The tax code is actually full of incentives designed to help you, but you simply can't take advantage of them if you wait until the end of the year to start thinking about it. Remember, major life events like starting a new job, getting married, or having kids can significantly change your overall tax picture. And if your tax planning doesn't keep up with these changes, you're potentially risking a surprisingly big tax bill. Ultimately, peace of mind comes from knowing exactly where you stand financially, and from having a solid, well-thought-out plan in place. And this isn't just something for the wealthy elite. Everyone, regardless of their income level, can benefit from proactive tax planning. A little bit of effort invested now can save you a significant amount of money, reduce your overall stress levels, and ultimately put you firmly in control of your financial future. So, let's aim to make tax season predictable and manageable, rather than a source of pain and anxiety. Taking control of your taxes is truly one of the smartest and most empowering financial moves you can make for yourself and your family. All right, let's dive into the first crucial action step you should take to get a handle on your taxes. It's time to review your paycheck withholding. This is where the rubber meets the road in terms of ensuring you're not overpaying or underpaying your taxes throughout the year. Most people fill out their W-4 form when they start a new job, or maybe after a significant life event, and then promptly forget about it. But life is dynamic, isn't it? It changes constantly, and those changes, raises, promotions, new jobs, the addition of side gigs or freelance work, can significantly throw off your initial withholding elections. These income changes impact your overall tax liability. If you haven't proactively updated your W-4 form to reflect these changes in your financial life, you could be setting yourself up for a surprise. Specifically, you might be under-withholding your taxes, meaning you're not paying enough throughout the year, and that inevitably leads to a big, unpleasant tax bill when you file your return. Nobody wants that. So, let's get practical. Grab your latest pay stub. It's time to do a little detective work. Take a close look and check exactly how much is being withheld from each paycheck for both federal and state taxes. This is the key information we need to assess your current withholding situation. Now head over to the IRS website and use their tax withholding estimator online. This tool is fantastic. It's quick, it's completely anonymous, so you don't have to worry about sharing your personal information, and it gives you a clear indication of whether you're currently on track to meet your tax obligations. If the estimator reveals that you're going to owe money, don't panic. It's a common situation, and it's easily fixable. The IRS tool will provide you with clear instructions on how to correct your withholding. This might involve adjusting your W-4 form, claiming fewer dependents, or electing to withhold a flat extra amount from each paycheck. Once you've determined the necessary adjustments, update your W-4 form. You can typically do this through your company's HR department or directly through your payroll portal. After submitting the updated W-4, your next paycheck should reflect the changes in your withholding. Double-check to ensure the adjustments have been applied correctly. Remember, the ultimate goal here isn't to receive a huge tax refund. A massive refund simply means you've been giving the government an interest-free loan of your hard-earned money throughout the year. The ideal scenario is to aim to owe only a small amount at tax time or to receive a small refund. This indicates that your withholding is accurately aligned with your tax liability. This way, you get to keep more of your money in your pocket throughout the year, where it belongs, and where you can use it for your own financial goals. This entire checkup process, from gathering your pay stubs to using the IRS estimator and updating your W-4, typically takes around 30 minutes. And that small investment of time can save you from a potentially nasty surprise come tax season. So, don't skip this crucial step. Reviewing and adjusting your withholding is arguably your most powerful tool for maintaining control over your taxes and ensuring financial well-being. Make it a regular habit to review your withholding at least once a year. Mark it on your calendar as an annual financial checkup. By staying proactive and informed about your tax withholding, you'll stay ahead of the game rather than constantly playing catch-up. Now let's delve into the crucial practice of meticulously tracking both your income and your deductions. This is a cornerstone of sound financial management and accurate tax reporting. This is especially important if you're navigating the world of side gigs, embracing freelance work, or managing various investments. The modern economy often involves multiple income streams, and keeping tabs on each one is essential. Remember, every single dollar counts, regardless of whether you receive a formal 1099 form or not. Don't underestimate the significance of even small amounts, as they can add up substantially over time. The IRS has a clear expectation that you will accurately report all income you earn, irrespective of its source or amount. Transparency is key to maintaining compliance and avoiding potential issues. A simple spreadsheet can be your best friend in this endeavor. It's an accessible and effective tool for organizing your financial data. Be sure to log the date, the specific source of the income, and the exact amount received for every payment that isn't reported on a standard W-2 form. This level of detail is crucial for accurate record keeping. Procrastination is the enemy here. Don't wait until the very end of the year to start piecing together your income information. Instead, make it a habit to log income as soon as it comes in. This real-time approach will significantly reduce the risk of overlooking or forgetting any payments. Now, let's shift our focus to deductions. Remember that legitimate deductions have the power to substantially lower your overall tax bill. However, it's crucial to understand that you can only deduct expenses for which you have verifiable proof. Substantiation is the name of the game when it comes to tax deductions. Therefore, make it a priority to meticulously keep all receipts related to your business expenses. These receipts are your lifeline when claiming deductions. This includes expenses for your laptop, software purchases, business-related mileage, and essential office supplies. Every little bit adds up. Leverage the power of technology by using a scanner app on your smartphone to digitize your paper receipts. This creates a secure and easily searchable digital record. Complement this by diligently logging all your expenses in your trusty spreadsheet. This provides a centralized view of your deductible spending. For each expense, meticulously track the date, the name of the vendor, a clear description of the item purchased, the exact amount spent, and a brief explanation of the business purpose. By adopting this real-time tracking approach, you significantly minimize the risk of overlooking potential deductions when it's time to file your taxes. Ultimately, this proactive and organized approach transforms tax time from a stressful ordeal into a calm and manageable process. Say goodbye to the days of frantically scrambling through a shoebox filled with crumpled and disorganized receipts, and eliminate the need to make educated guesses about your expenses, which can often lead to inaccuracies and missed opportunities. Well-organized financial records translate directly into reduced stress levels and the potential for greater tax savings. Cultivating this habit effectively transforms tax preparation from a dreaded nightmare into a quick, easy, and even empowering task that you can approach with confidence. So take the first step and start tracking your income and expenses today. Your future self will undoubtedly thank you for the peace of mind and financial clarity you've created. Stay organized, save money, and take control of your financial well-being. Max out your retirement accounts for a double win. Save for your future and cut your tax bill now. Contributions to a 401k or traditional IRA lower your taxable income, reducing what you owe. For example, contribute $10,000 to your 401k and you're taxed as if you earned $10,000 less. Check your year-to-date contributions and compare them to annual limits. If you're behind, increase your contribution rate now. Most plans let you adjust anytime. Don't miss out on your employer's match. It's free money. Even a 1% increase adds up over time. Every dollar you contribute before year-end is a dollar the IRS can't tax this year. Pay your future self first and lower your tax bill. Make this adjustment during your mid-year checkup. If you're self-employed, freelance, or have big investment gains, you need to pay estimated taxes quarterly. The IRS expects you to pay as you earn, not just in April. Miss a payment or underpay, and you'll face penalties. Set aside 25-35% of your self-employment income in a separate account for taxes. Use IRS Form 1040 ES to estimate your payments and mark the deadlines: April, June, September, January. If you had a big one-time income event, make an extra estimated payment to avoid penalties. Check your payments so far and get ready for the next deadline. Being proactive keeps you penalty-free and in good standing. Don't let estimated taxes catch you off guard. Don't overlook health savings accounts, HSAs, and flexible spending accounts, FSAs. They're tax-saving powerhouses. HSAs offer triple tax benefits. Contributions are deductible, growth is tax-free, and withdrawals for medical expenses are tax-free. If you have a high-deductible health plan, check if you can max out your HSA by year-end. FSAs are pre-tax accounts for medical expenses, but they're use it or lose it. Spend the balance before the plan year ends. Log into your FSA, check your balance, and plan upcoming medical or dental expenses now. Contributing to these accounts gives you a discount on healthcare equal to your tax rate. Don't wait until December to scramble. Plan your spending now. Check your eligibility and make sure you're taking full advantage. These accounts are easy ways to lower your tax bill and cover health costs. Don't leave this money on the table. Good record keeping is the backbone of stress-free taxes. The IRS can audit returns from the past 3 years. Be ready to prove every deduction. Go digital scan receipts as soon as you get them and save them in organized cloud folders. Create folders by year and category: business income expenses, medical donations, etc. File every document immediately. Don't let paperwork pile up. When tax time comes, everything's organized and ready to go. This habit saves time, maximizes deductions, and gives you peace of mind. Start today. Set up your folders, download a scanner app, and scan any receipts you have now. Make it a non-negotiable habit. Organized records mean less stress and more savings. You've got the knowledge now. Take action. Download the free mid-year tax checkup checklist linked below. Set aside an hour this week to go through each step: review withholding, log income, check retirement and health accounts, and organize your records. Don't wait. Every day you delay is less time to make adjustments. The goal: no surprises next April, just confidence and control. Taxes aren't just about saving money, they're about building a strong financial foundation. Take charge now and free up energy for your bigger goals. Use the checklist, make your adjustments, and set yourself up for success. Don't be the person who wishes they'd acted, be the one who's ready. You have the tools and the knowledge. Start today and thank yourself next tax season. So that concludes your comprehensive mid-year tax checkup. Putting in a little effort now means a much smoother and truly stress-free tax season later on. If you found this information helpful and insightful, please hit like and subscribe to the channel for even more valuable money tips and tricks. Let me know in the comments below which step you'll be tackling first in your tax planning. Thanks so much for watching, and I'll see you in the next video.